Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. I'm genuinely excited about this video, and the reason is because last video we talked about what you need to do to before you start investing in the stock market. Okay, and that video wasn't just for newbies, it's for everybody. Doing that research for me, it's actually helped me to kind of remember some of the things that I needed to do, just including having that emergency fund, or what you need to do in your time horizons and the things that we talked about. So if you haven't seen that video, go and watch that video, because this is sort of a 3-part video. So this is the second one, and I'm genuinely excited about this video because I know a lot of brothers and sisters genuinely prefer buying ETFs over individual stocks. And the reason is very, very simple, and I like the reasons. Okay, and inshallah I'll talk about what I will be doing moving forward and towards the end of the video. But it is one of those things. Yeah, if you are, say for example, a busy person, you've got your family, you've got your job, you just need to make sure that you're just investing in the stock market, and you don't have the time to do the research and do all the things that I do on a daily basis, then of course all you need to do is buy ETFs, Sharia-compliant ETFs, and hold them for a long time and just dollar cost average every single week. And what I want to do today is I want to share with you guys, I put together about 6 different ETFs plus bonus ETF at the end of the video. I will show you the returns is what I'm genuinely excited about. We talked about these ETFs before, but I want to show you what the returns are for 2025, the year to date. And just for basically for comparison reasons, the S&P 500 right now as we speak, we got what, 3 days left or 4 days left of this year, is up about 17.8. Let's call it 18%. The Dow Jones 14%, the Nasdaq 22%, and the FTSE 100 is about 20%. I'm telling you right now, some of these ETFs have crushed all of these ETFs, including the Nasdaq, which is up 22%. And these are Sharia-compliant ETFs that people, picked and put it together for us. And it is important to sometimes sit back and think, okay, am I actually better off? Even for me, that's the question I'm asking. Am I better off actually buying these ETFs and call it a day? Or do I still have the energy and time? And for me, I do still have the energy and time. But potentially, like I said, I said I'm going to talk about towards the end of the video. But I think in the long run, what I'm going to do is diversify by having more ETFs, inshallah, into the portfolio, and buy more ETFs rather than just buying individual stocks, because sooner or later I'm gonna run out of energy to do all the research that I'm doing every single day. And if these ETFs are getting better, the expense ratio is coming lower, then of course it is important to buy these ETFs. Okay, but before we look at the ETFs, there's another thing I need to talk about. That's the expense ratio. Okay, the expense ratio, because remember, these ETFs include hundreds of companies, and someone has to maintain it. Someone have to make sure that they're Sharia compliant on all of those things. So what I'm going to show you now, and there is a fee that you need to pay to these people for that maintenance, if you like. So you say we have $1,000 invested, initial investment, right? Annually, we're going to add basically $1,000 a month, so let's go with 12,000, sorry. Okay, annual expected investment return. The S&P 500, basically on average, when we say average, we're talking about average of 10 years, 15 years, it returns about 8 to 12%, right? So we will go for the basically 8% only. Okay, expense ratio for some of these ETFs is 0.3. We'll go for 0.3, 0.35, and 0.45, I think, or 0.5, sorry. So we'll do all of these things. How long are you investing for? Say, for example, you're in your 20s and you want to invest for the next 30 years. Okay, so we'll put 30 years. I want to show you your initial investment and how much your contribution every single year, okay, based on that 8% return, based on this expense ratio, how much it will cost you, okay, in 30 years. So your future value of total investment in 30 years is 1.3 million. And the total cost of the fund is 73,000. It's a lot of money, but for 30 years, for basically the return that you've got, 1.3 million, just when you see that, you're like, what's 73,000 when you making 1.3 million. And I get that, okay, but of course it adds up. So year one, this is what we invested. The end balance for that year, that was how much it was. The total cost for basically for the first year, the cost for the second year. So the more you make, basically, the more it costs you. And again, it is fine. I promise you, with the peace of mind that it comes with, okay, the fact that all I'm doing is just buying these ETFs and someone else is going to manage it. I don't really care what happens. I'm going to dollar cost average. Whatever the cost is, it's less than 100,000. Okay, and in comparison to 1.3 million. Now let's change things. Okay, it says 0.5. So because 0.35, some of them have a 0.35, and you will see it today. Okay, then again it goes up a little bit. Oh, sorry, that's 2, that's not 5. 0.35. Okay, there you go, 85,000. That's how much it's going to cost us. There are some that are 0.4. Okay, closer to 100,000, and there are, I think Wahid one is actually 0.5, I think. So let's do that. Basically over 120,000. But you still have 1.2 million. Okay, still have 1.2 million. But it's gonna cost you 120,000 US dollars. Okay, but your investment, of course, the first year, that's how much you make. It costs you £5. Then basically it increases as your portfolio size increases every single year, of course. So that's the expense ratio. That's what I wanted to share with you guys. At least it's clear. Do you understand what you're paying for? You're paying for the maintenance of the ETF, and if you're paying that, which is the highest I think I've seen, okay, 0.5, and Wahid used to be 1%, I think, at one point, and then they reduced it. And by the way, I'm not sure what's going on with Wahid. I don't think they're trading in the I couldn't find it in trading 212, so I don't know if they've been removed or something. But there you have it. That's the expense ratio. Now let's talk about the ETFs. That's what we came here for. So I'm going to talk about 7 different ETFs and a bonus. I said 6. I was lied. Right. I'm going to be very quick. Okay. You can pause the video and have a look at the main details. But for me, the most important thing about this is basically the name of the ETF and the expense, basically the expense ratio, and at the same time, the return for this year. Right, we've already seen the S&P 500 return about 18%, the Dow 14, 22%, and 20% for the FTSE 100. Just bear that in mind when we talk about some of these things. So iShares basically is a company owned by BlackRock. They are based in Ireland, and they come up with all the Shariah-compliant ETFs. 3 of them we're going to talk about today. They are basically, this is the first one. This is US based mainly. It has a quite well diversified. Apart from the top 2 companies, the rest are very well diversified in terms of the percentage. It's changed a little bit. I think they've added a couple of companies. I think Micron is probably one of the ones that they've added or it came up, and because it wasn't on the top 10 I think last time. But it has a asset under management. So I'll explain what these things are for once. So expense ratio is, we've already talked about it. This is how much it returned year to date. We'll talk about it in a second. If it pays any dividends, it will be distribution yield. How often they pay that, it will be the semi-annual, it will be quarterly and whatever. This is asset under management. This is how much money basically this ETF is holding at this point in time. Rebalance of quarter frequency. How often do they actually rebalance it and change these companies, whatever? That's quarterly. Some of them change monthly. How many sectors of the S&P 500 does it have? So that's 10 for this one. Is it based in, can you basically buy this in the UK through your ISA account? Because that's important for us. Is yes. And if you live in the US, maybe you might not be able to. If you live in other countries, of course, you need to look at, I think European countries, you can actually buy it. But I don't know if you can buy it in tax advantage accounts if you like. And the number of holdings is basically how many companies or share basically are in that ETF. So this one is 132. Let's go back to the return. Basically, the expense ratio is the lowest so far for Shariah-compliant ETF that I'm aware of. And the year to date is almost 8%. Think about this. Your money has generated 8%. Instead of sitting in your bank right now, because that's the alternative, right? Or potentially buying a brand new TV because there's sales in all sorts of things, whatever. You've invested that money as soon as you got it, okay? And it has generated, so let's call it 8%, which is basically the average S&P 500 return, right? Absolutely beautiful, honestly. And as we go to the other ETFs, okay, it gets higher. This is the lowest return for all the Sharia compliant ETFs this year. This is why I'm really excited about this video. Okay, and now the whole market's done really great this year, but the fact that they've done this shows me these ETFs are actually decent overall. Okay, so let's talk about the rest of them. So that's the first one. The second one is the world, but iShares, but the world. It includes companies from other countries, including ASML, okay, and other companies. So it's got 334 different companies, and look at the return. Expense ratio, by the way, is the same, but look at this return. 9%, 9.42%, which is really, really, really good. Honestly, if you can get 9% on your money every single year moving forward, can you imagine that? We just factored what, just 8%. Imagine you were basically doing that 9% for basically an ETF that's returning this, basically charging you that much. Okay, you will have 1.5 million. Even if you do it for next 15 years, right? You'll have about 300 something. If you did, this is why the compounding takes effect when the longer it goes. So 20 years, you can have basically £500,000, over £500,000. So that's the second one. The third one today is halal ETF, basically Sharia company, the Wahid basically one. I couldn't find this on Trading 212, so I'm not sure what's going on with that. But it has expense ratio 0.5. It returned almost 20%. That is very close to the S&P 500. In fact, it basically tracks the FTSE 100, almost beating the S&P 500, beating the Dow Jones, but closer to the Nasdaq. Okay, so that is really, really good. And again, they have a small dividend. They pay that annually, and then all of that details is there. You can pause the video, have a look at it. But 219 different companies. Now, one thing these companies do is the ETFs do, the top two are always heavy and the rest of them are kind of spread out, which is absolutely fine. Okay, and this one includes the top dogs. That's one of the reasons. Whereas if you look at these other companies, they've got Microsoft and Tesla. Tesla hasn't done as amazing as the rest of the whatever, the Max 7, whatever they call them. And there are companies like, for example, Salesforce, that's in here, but not top 10 this time. They have not done well this year. Johnson & Johnson did a great job. AMD has done great job. Procter & Gamble is down, I think, about 19-20% this year. So that's why it underperformed. With this one here, because they've got the big boys. So Alphabet has done an amazing job. Meta's done great job. AMD is like up 100 something percent, whatever. So that for that reason, this is up a lot. Okay. The next one is the Invesco Dow Jones, and I know a lot of the brothers, you basically have this ETF, and I've seen the dollar cost averaging into it every single week. The return for this one was 20% as well, which is absolutely amazing. They don't pay any dividend, so ACC is accumulating, so they reinvest it for you. But look at this, 8%, 7%, 6%. I really like this. And instead of having 20%, 10% on this one, 8%, 7%, 6%, 4%, 3%. Again, although 42% is basically on the top 10 of these companies. And the fact that it returned 20%, but you're paying 0.4 is slightly more than the first two that we've seen, but slightly cheaper than, of course, the Wahid one. Okay, and again, there's a lot more money invested in this one than actually the rest of them. $1.1 billion is invested in this, and it has 1,497, almost a trade basically similar to the S&P 500, if not basically. It's got more than that. Okay, the next one is SPUS. This one is only the US. If you live in the US, well, good luck to you guys, because look at this, almost 21% return this year, but you're paying 0.45. Again, it's a slightly expensive one, but the fact that is 21%, that's the Nasdaq returns. But look at the companies though: Nvidia, Apple, Microsoft, Broadcom, Alphabet, Tesla, Eli Lilly. Exxon has done well this year. Johnson & Johnson did a great job. AbbVie has basically done great job. So every single company in this portfolio, apart from maybe Apple, Eli Lilly, Exxon, done an absolutely amazing job this year. Almost a 60% is on the top 10 of the weighting when it comes to the weighting side of things. So 21% is great. So if you are new and you're looking for a company, you live in the US, you want to invest in the basically Sharia compliant ETFs, this is probably a good one to look at. Okay, again, do your research about the company that owns it. That's important. That's one of the reasons why I've always said to you guys, I feel comfortable investing in basically this one here because of iShares, because of the fact that it's BlackRock. BlackRock is the biggest, investment firm in the world, if you like, our asset management company. So for that reason, I feel comfortable. With Wahid, I've always said I'm a bit cautious about it. I don't know what's going on, and I need to find out why they have removed it from trading 212 and so on. Anyway, so this is that one. So the next one that we're looking at today, so we've done this one, sorry, 21. Number 6 is the iShares as well. This one, I left this one for dead for quite some time. I actually didn't want to even look at this one. And then I thought, actually, let me look at the emerging markets one this year, because I haven't actually been paying too much attention. Guess what? 35, let's call it 36% total risk, basically return in terms of price wise. That is absolutely ridiculous. This one always used to return negative because last few years the emerging markets were not doing great, and this year, because of everything that's happening in the US, the companies that are in here, look at this. Samsung, for example, they've got loads of like Far East Asia countries, for example. They've got, what do I know? Okay, so they've got a couple of like Saudi banks and so on. So, but the fact that they got Samsung here, they've got the basic Reliance Industries and basically the Chinese companies and so on. They is very well diversified in my opinion. Okay, 35% on that, and the fact that it returned 36%, absolutely crazy. And you're getting almost a 2% dividend yield, which is really, really good if you think about it. You know, I like that dividend. So it is interesting. This is an interesting one that I'm actually potentially to diversify my portfolio, potentially looking into, inshallah. But again, the return of this year does not mean it's going to return the same thing next year. So if you're buying this for the 20-year plus coming, and a slightly expense ratio is basically a little bit more expensive. Why? Because they have to look into research all of these companies. It's not the same as, of course, the ones that they have already, the US ones and so on. So another great ETF. Now the next one is not a Sharia compliant by trade, but 99.9 of the companies in here are Sharia compliant, including Intel. Now there's one company who's, I think it is like 0 point something percentage, that's basically not Sharia compliant. The rest of the companies in these ETFs are Sharia compliant, which makes it basically almost automatically Sharia compliant. But look at the return, and that's expected because remember, the semiconductors have done an absolutely great job this year. The ASML, AMD, Taiwan Semi, Broadcom, Nvidia, Micron is killing it. Micron, I think, is up about over 200 something percent. Lam Research has done a great job. Intel's come back this year. Qualcomm is probably the only one that's sort of disappointed, and that's why it's come down. I think it was around mid here somewhere, in terms of percentage wise. Now it has come down, and the rest of them have taken over, which is really good to see. 36% basically total return this year. So if you own this one, well done to you guys. Slightly higher expense ratio. It has more money in it, $3.4 billion in terms of basically asset under management, and it is actually available to buy in the UK, and in the US is also available. I think it's SMH, I think, which is basically similar to the one that we have in the UK. So you can actually buy that one, and I would actually buy this one and where is the other one? This one here, and call it a day, or potentially even add this one as well. So the three that I'm really interested is this one here, and then this one here. The three that I'm genuinely interested. And the final one is a bit of a different one. We've never spoken about Sukuk is here. Sukuks are like bonds, okay? And I'm learning more about it. I think I know enough for now to not maybe invest in yet. I don't know. I don't know. But I found this one. It's a Sukuk that's basically run by iShares again. The reason I highlighted this part here is two things. The return is absolutely shocking. Okay, it's 2%, because remember, it's a Sukuk, it's a bond. Bonds don't really go up in values or whatever, like they're just useless anyway. Distribution is basically where it is at. That dividend yield 4.8%, almost to 5%, basically guaranteed every single year for whatever years to come. So you can hold this for the next 10 years and get that 5%, and that's it. You're not getting price appreciation as much, but you're getting that. 52% of this is based on this Sukuks that are owned by different companies, different countries, if you like. So yeah, Sharjah, Saudi, what are they? KSAA, Sukuk Ltd, whatever that is. Again, so it looks like it's a lot of Middle Eastern age, basically Malaysia, Indonesia, sort of Sukuks. So yeah, it's really interesting. If you're looking for, if you are at the age where, so for example, if you need that income, not even talk about age. If you need income, okay, and don't really, you need that 5% income solid every single year, this is potentially one that you can look into. I hope that helps. So we've talked about why you should invest in the stock market, what you should be doing before you invest in the stock market. We've talked about ETFs, and I genuinely think, honestly, if you live in a country where these ETFs are available, or any other Sharia compliant, by the way, put on the comment section if there are any other ETFs that are available in your own countries. Inshallah, then I'll maybe put another video together in the next couple of days and then share it with the community as well. Let me know. Okay, I know all the HSBC ones that are based in the UK, and they are more or less similar to this. They track the same indices. For example, the MSCI World Islamic, they have a same one. The only difference is the name iShares. They have the same company, same more or less weighting and so on. Expense ratio might be around the same as well. So I didn't want to include that because you're just repeating the same thing, right? But yeah, if you are new to investing, or you are existing and you're just sick and tired of basically changing things up and doing portfolio updates and rebalancing and all of that stuff, this might be a good one. And like I said to you, I'm interested in the SMGB. I'm interested in basically the emerging markets one, and I'm genuinely interested in this one here, the Invesco. I had this one before, I sold it, and I think since I've sold it, it's gone up. So good, well done to the brothers who have actually been dollar cost averaging into this one for quite some time now. So you got 20% return, which is absolutely wonderful to see. So yeah, that's what I wanted to share with you guys. I hope you're enjoying this content. I don't own any ETFs to share with you guys right now, but I can see myself, I promise you, I can see myself. I don't mind paying that little bit of expense ratio for me to have that peace of mind. And my main concern has always been the growth side of it, and the fact that I would love to have a portfolio that is basically returning 2 to 3% when it comes to the dividend side of things. So if I can have a companies, basically ETFs that sort of give me this type of returns, that 2% and so on in the future, then I actually don't mind. I genuinely don't mind basically diversifying away from individual stocks into ETFs. But of course, I will still hold minimum 40, 50, 60% of my portfolio in individual stocks, and the rest may be ETF. So that's sort of a balance, inshallah. But as always, when I do it, I'll let you know. I'll share that with you guys. If you haven't joined us at the Patreon account, please do so. It genuinely helps the channel. We've got one more video where we talk about individual stocks that you could potentially basically add to your portfolio if you are starting new, or if you already whatever. Some of the companies actually are quite cheap right now. So I'll talk about that inshallah next. Have a wonderful day. Assalamu Alaikum.